Most people believe one simple financial rule: work hard, save money, and keep it safely in the bank. Sounds responsible, right? But what if the place you trust to protect your money is quietly slowing down your financial future? What if the system designed to help you save is actually designed to make money from you? Here's the uncomfortable truth. Banks are incredibly good at one thing: making money with your money. And once you understand how the system really works, you may never look at your bank account the same way again. Because the biggest problem isn't the obvious fees. It's the hidden costs most people never notice. And the first one might already be draining your wealth every single month. Imagine paying rent just to store your own belongings. Sounds ridiculous, right? But that's exactly what millions of people do with their bank accounts. Many banks charge monthly maintenance fees simply for keeping an account open. It may not sound like much: $10 here, $12 there, maybe $15. But here's where things get interesting. That tiny charge quietly adds up to over $150 every year. And over the course of 20 or 30 years, you're potentially handing thousands of dollars to a bank for doing almost nothing. Now, banks will say those fees can be avoided, but look closely and you'll notice the conditions. Maintain a minimum balance, deposit a certain amount every month. Use specific services, miss one requirement, and the fee quietly returns. Most customers don't even notice it happening, but the bank certainly does. And yet, this is only the beginning, because the next hidden cost can hit you in seconds. You swipe your debit card for a small purchase. Maybe coffee, maybe gas, maybe groceries, but your balance is just a little lower than you expected. Suddenly, you're hit with an overdraft fee. Not $5, not $10. Often $35 or more for a transaction that might have been $10. Now imagine it happens several times before you notice. One small oversight can quickly turn into hundreds of dollars in penalties. And here's the part that surprises many people. Overdraft fees have historically generated billions of dollars every year for banks. Think about that. One small mistake from customers has become an entire revenue stream. But even those penalties aren't the biggest financial problem. The real wealth killer is something far quieter, and it hides in your savings account. Most people assume their savings account is helping their money grow. After all, that's what interest is supposed to do. But take a closer look at the actual numbers. Many traditional savings accounts offer interest rates so small they barely register. Some pay 0.01% annually. That means if you had $10,000 in savings, you might earn just $1 a year. Yes, one now. Compare that to other accounts that offer several percent annually, the difference becomes enormous. Over time, two people saving the same amount of money could end up with drastically different results, simply because their bank pays almost nothing in return. But why would banks offer such tiny returns? The answer reveals how the system really works. Because your money doesn't just sit there, your bank is using it. Here's something many people don't realize. When you deposit money in a bank, it doesn't just stay in a vault. Banks use those deposits to issue loans, mortgages, credit cards, business loans, auto financing, and the interest on those loans is often far higher than the interest they pay you. That difference is where banks make a significant portion of their profit. In other words, your money helps fund loans that generate income for the bank, but you only receive a small fraction of the return. Now, to be fair, banks provide valuable services: security, convenience, payment systems, financial infrastructure. But once you understand the model, you realize something important. Banks are designed to manage money, not necessarily to grow it. And that realization leads to another hidden cost, one that appears in the fine print of your account. Some charges are obvious. Others are buried so deep, most people never see them. ATM fees, foreign transaction charges, wire transfer costs, minimum balance penalties, currency conversion fees. Individually, they may seem small, but together, they quietly chip away at your money year after year. Take ATM fees, for example. Using a machine outside your bank's network could trigger multiple charges. Your bank may charge you, the other bank may charge you. Before you know it, withdrawing your own money costs several dollars. Multiply that over time, and it becomes another steady stream of profit for the banking system. But here's the bigger question. Are banks even meant to make you wealthy? Or are they simply tools for storing and moving money? Because understanding that difference can completely change how you manage your finances. Banks are excellent at certain things: keeping your money safe, allowing instant payments, providing financial stability. But historically, they've never been the primary engine for building wealth. Why? Because most traditional bank accounts are designed for security and liquidity, not growth. And when inflation rises faster than the interest on your savings, your purchasing power slowly shrinks. In other words, even though your account balance stays the same, your money quietly becomes worth less. This is why many wealth builders use banks differently. They treat them as financial parking spaces, not growth engines. And that mindset shift can change everything. People who understand money rarely rely on their bank to grow wealth. Instead, they separate their finances into different roles. Banks handle everyday money, paychecks, bills, emergency funds, short-term liquidity. But long-term growth often happens elsewhere, through investments, businesses, assets, opportunities that historically produce higher returns over time. The bank becomes a tool, not the center of the strategy. And once you see it this way, your financial decisions start to look very different, because you're no longer just saving. You're thinking about how money actually grows. Banks are not the enemy. They play a critical role in the financial system, but they were never designed to make you wealthy. Their job is to store money, move money, and lend money. Wealth growth requires something different: strategy, awareness, and understanding where your money actually works the hardest. So the next time you look at your bank balance, ask yourself one question: is this account helping my money grow? Or is it simply keeping it parked while the system profits quietly in the background? Because once you start asking that question, you've already taken the first step toward financial awareness. And that awareness might be the most valuable financial tool of all. If you found this eye-opening, subscribe for more insights into how money, wealth, and the financial system really work. Because the more you understand the rules, the better you can play the game.